Okay, today is Wednesday. It is 2:22 a.m. It is March 18th. So what I'm surprising myself now. Um, I'm actually surprising myself. So what I just did is I made a single trade on my demo account, and then I said to myself, okay, so it broke out. I recognized that it is a breakout. I confirmed it with a inversely correlated security, which is the EU, and then I concluded that the breakout of the UC will be followed by the immediate movement towards a specific resistance, and the price jumped up after I got in. After it dithered a little bit, it jumped up, and then it had a 0.5% gain. And then I thought to myself, okay, so I'm going to get out of that trade. And then as about 15 minutes passed, and then now my my analysis my analysis told me that it was going to go to the next resistance, which I outlined, and now the price is actually moving towards that direction. And so now I'm like now I'm thinking, okay, so in the past, what I would do is if it jumps a little bit, it's profit, so I get out because I don't want to lose it. So that has been the story. But now that I'm thinking like a second level of understanding of, okay, so I analyzed it. I know where my entry point is, and when I enter, expecting the breakout to continue, it continues. And I have a stop loss that clearly says if it fails, then it's going to drop below it. It's gonna take the trade out. So I have that as well. Then when I conclude that this is the price where it's going to where the first line of resistance will be, then it starts to move in that direction. And so I am now making the correct I'm actually now seeing the analysis unfold, and I'm seeing it. I'm like saying, okay, so the price is gonna go to here, and the price does go to there, okay, and here's the reason why, and it's purely just support and resistance, okay. So based on observing to the left side, there is a resistance area in that area, that particular price level. When I enter, gauging that, okay, that's where the price is going to be, and then I enter, it moves in that direction. Just in case it goes in the other direction, I set where my stop loss is. So that covers the loss part of it. And then I see that if I hold it with that analysis, what I'm attempting to say is, say is that the analysis, with more experience and more knowledge, the analysis becomes stronger as time passes. My analysis is becoming stronger. Okay? It is incredibly, it is essentially, addiction and emotion is a blocker in progressing further. Okay? Essentially, that's what it is. So if I'm on a marathon, if I'm in a marathon and I'm trying to go forward, so essentially what emotion and addiction is like a steep incline, or maybe it's raining or something, right? So if I were to specifically describe what that situation is. And so now what I'm seeing is that now that I have removed the emotion and the addiction to trading, Okay, I'm beginning to rely on my analysis. My analysis is saying, okay, so I see where the serious resistance is, I see where that resistance is, where I need to take it seriously and exit that trade as the price is near there. Okay. Then also when I look at it and I say, okay, I correctly state that when this particular thing occurs, then that's where the entrance is. Okay. A breakout essentially is within a zone. Okay, within a zone, a breakout occurs, which means that there is a high likelihood that when it breaks out and holds that value, I can correctly assume, okay, I can correctly conclude that the breakout and a hold is exhibiting or pointing an arrow into the direction where it's going to keep going because it's now in that area. Now it's in that area, okay, of support and resistance. And when it enters into that resistance, the price wants to go there and then move up to that area, okay? So that's the second conclusion analysis that seems to fall in. Now it's fitting in now. Then the third part is just to make sure that if it moves against me, then I don't lose that much. So then I set my stop loss. And setting my stop loss, I can clearly see it based on the price action. The stop loss that I placed there was correct as well. Okay? So the analysis is improving. It's like sometimes I would look at it and say, okay, so the price comes down, it jumped a little bit, and I don't know what's going on, because what is that, a pullback? So even if it drops like this, even if the downtrend channel is narrow, it could break the trend, but it could go up and then it still come back down and move the other direction. So there's some ambiguity in certain situations. So something like that, when I take that trade, there has to be some other form that tells me, something that tells me that there has to be some more information, okay? So if it drops here, goes back up, and if it goes up, then I can't take that trade. But if it comes down, moves up, drops a little bit, and then creates a higher high, okay, dips a little bit, and then goes up, breaks that resistance that has been established, and then holds. That right there is a magical formula. That is a magical formula. That is magic. Okay? That is magic. Because that is saying, that is creating a higher statistical probability. Because I know that when it drops, the statistical probability of reversing can be low as 25% or maybe 10%. Then as it interacts with that support area, drops back up, goes up, and then drops back down, and if the price moves up beyond that newly established resistance, okay, oh man, I'm getting goosebumps. Wow, I'm getting goosebumps. So when I stand next to a Catholic who speaks with such belief and understanding, I get goosebumps on practically any topic. As a practicing Catholic, I feel that. I feel goosebumps. And then now I see, okay, so today might be the day where I become conscious. I become conscious of something called, it feels magical about what an A+ setup is. Okay? An A+ setup is that precise description. Okay? When the price moves down, bumps up, it could go that way, it could go this way, or it could go sideways, or it could go this way. Okay? The probability of it will be like a 30% kind of thing, right? It's it may be less based on where it is. It may be less because if it's doing a pullback, then it's going to be if it's a pullback and based on the way that it's moving, it could be maybe 5% of the time, right? So that could be an F minus 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 trade, which it turns out to be in a lot of the cases would be F minus 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 trade. But when the price behaves and fully establishes that it is the front side, okay? The key word is the front side, okay? The magical word is front side. The magical word called front side, okay? If I'm trading I'll put, if I'm thinking of shorting, the magical side is the back side, okay? But the magical side of trading on the front side is going long, expecting the price to move up, okay? So now I see. I didn't really understand it, okay? So I didn't really understand what the difference between a A plus setup and a F minus setup or C setup or a D setup or whatever the setup it is. But now I can clearly demonstrate. I can now clearly verbalize what an A plus setup is. Here I'm going to verbalize this based on just price action. Okay, I'm describing an A plus setup, just verbalizing it. Okay, price moves down, bounces up, bounces down. Okay, reaches somewhere near the support area, goes above, creates a higher high. Higher high drops right around where the previous high is, and then it goes up and then breaks that resistance that was just set up, and the price holds. Okay, and then when I look from where that resistance is to the next resistance, it's wide. Then the price goes above that resistance and holds, and the price moves into that region. That's where I enter. That is an A plus setup. This is a magical statement. That is a magical statement. Yeah?